Hi guys, back with another video for you guys on personal wealth, investing, and coffee. I know I haven't been showing my coffee lately, but I'll soon show you guys my coffee setup in another video. But today, what I'm going to talk about is the crazy month so far that we have, right? September, the crazy month of September that we have. From the 1st of September all the way to right now of this recording, it is the 20th of September, and how the stock market has been doing. And today I'm going to tackle a topic about is stash away risky, right? Meaning, if you were to go up to the highest percentage of risk index on StashAway, the 36%, is it risky? I want to debunk the notion of how risky it is and what a risk appetite means for you. And I'm going to tell you in my words what I think about the riskiness of StashAway. First of all, let's go through the S&P 500 for September. You can see on the 1st of September all the way to the 20th of September. Let me just zoom in closer for those of you guys who are mobile so you can see it. First, all the way to the 18th of September, the market is down 5.8%. Now, bear that in mind, guys, 5.8%. Right, and we know this is S&P 500, so it's sort of like an ETF, right, where it comprises of the top 500 best companies in the US. Now, a lot of people would ask me, is StashAway risky? Well, let's take a look. S&P 500 dropped by 5.8%. What about Top Glove? Really famous here in Malaysia. People have been buying Top Glove stocks, right? Let's just look at the 1-month chart. From 1st of September all the way to the 18th of September. Look at this. Top Glove dropped by 9.6%. That's a lot more than the S&P 500. The S&P 500 only dropped by 5.8. Here, Top Glove dropped by 9.6. So 3 to 4 percentage points more in terms of its value, right? So let's look at supermax. Let's see how they do, right? 1-month index. Let me zoom in again for those of you guys who are mobile. Let's look at it. So 1st of September all the way to right now. 30% drop. That is insane, guys. 30%. So let's take a look again in AirAsia stocks, right? You know, AirAsia stocks has been dropping really badly and hasn't really recovered yet. Let's take a look. 1st of September all the way to the 18th of September. A 5% drop. Not too bad. Very close to the S&P 500. Now, let's take a look at Maybank, right? So let's see Maybank first all the way to right now. It's actually up, surprisingly. Wow. Okay, that's really good. 1%. You see, guys, what I'm trying to illustrate here is I get questions all the time about, is StashAway risk index safe? Should I go for the 6%? Or should I go to the 36%? Is it wise to go up to the 36%? Or is it better to stay at the 20%? And all these questions. But many of the times, these questions can be asked in a different way. We are so concerned about how StashAway's risk index will affect our portfolio, but many of us are happily buying individual stocks like Top Glove. Look at this. If you would have bought it in the beginning of the month, all the way to right now, you would have lost 9.6%. I'm not saying it's a bad investment when you bought it, but I'm just saying look at the risk. The risk is way, way higher when you buy individual stocks. But many of us do not even blink an eye when we buy these stocks, right? Because we just buy it and then we just think it would go up all the time. But think about it. Your risk index is actually way higher when you choose individual stocks. Now, obviously, with higher risk comes higher yield or higher profit or higher loss, right? You can see in this case, supermax lost 30%. So you would have bought it in September, 1st of September, you would have lost 30% of your money. And just to illustrate all these things, we're happy to buy Top Glove, we're happy to buy supermax, we're happy to buy maybe some of us AirAsia, Genting, Maybank. But when it comes to StashAway, we're so apprehensive, right? So let's take a look at how StashAway performed. Now, I want you guys to bear in mind, S&P, right? 5.8%, right? Top Glove, how much? 9.6% drop, right? Supermax, how much? 30% drop. That's crazy, guys. The only positive was Maybank, 1% up. Let's take a look at StashAway and how they perform. So taking a look at StashAway, this is my performance for the highest risk index, 36%. You can see at the 1st of September, I have $70,560, right? And throughout the course of that time, I've deposited 1,500 all the way to the making of this video. And you can see I actually lose money, right? So I started off with 70,500, and now I have 69,280. Now, minusing away the 1,500 or the 1,500 that I've put the money in, my equivalent stock loss or percentage loss from the 1st of September all the way to right now, the 20th of September, it's 3.9%. Guys, how much was the S&P drop? 5.8. And this is 3.9. That against proof to you guys that StashAway, no matter which risk portfolio you choose, it's already way more diversified than just choosing a individual stock. That's why I've always encouraged new beginners to just start with StashAway, start with any portfolio, because at the end of the day, it's way safer than just picking individual stocks, because you know what you're getting. You're getting your risk spread out, and even in this case, it's just short term. I know we can't really measure in the short term, but just to show you an illustration, this month alone, I did not, my portfolio, the highest risk portfolio in StashAway, did not drop as much as the other portfolios or the S&P 500 or the top glove stocks or supermax or AirAsia or Maybank. So guys, again, what is your long-term strategy in investing, right? You gotta ask yourself. And if you want to invest, I encourage you to invest for the long term. Yes, you could set maybe a few percentage, 10 to 20% of your money aside to play with like individual stocks like Top Glove, Supermax, and so on. But it comes with a lot of risk. I do not do that. I might do that one day, and I'm not saying it's a bad idea, but what I'm saying that is it's a bad idea if you invest majority of what you have or your money is set aside into individual stocks, because this is what you get. Look at this, guys, Supermax, 30% down. It's crazy to lose 30% in just one stock. Let's say even if you were to buy 10 stocks together, your risk is still way higher than StashAway's highest risk profile. You know why? Because when you invest in StashAway's highest risk profile, equivalent of the number of companies that you invest is actually 1,000 or even like 1,000 over companies. So you're basically buying an aggregate of 5,000 to 6,000 over companies when compared to just buying individual stocks. So even if one company fail, it doesn't really matter. So that's the uniqueness of investing in ETF. I'm a strong believer in ETF. Warren Buffett recommends that we invest in ETF, and so far, this month it hasn't been a good month, right? I've lost money, an equivalent of about 2,000 plus almost 3,000 ringgit, but it's okay. I'll see slowly dollar cost average down and slowly add in more and more and more money, right? So that's my philosophy. For those of you guys who wants to know, is it risky or is it not risky? I think if you want to hold it and can hold it for at least 5 years, go with the highest risk profile. It's not as high of a risk actually compared to just individual stocks. We're more than willing to buy individual stocks without blinking an eye, but when it comes to StashAway, we're all just so worried about it. So just don't be worried. Continue to invest, and guys, in the long term, let's hope that we'll grow our wealth together, right? And hopefully that will soon recover from this crazy stock market. Thanks for watching, guys. See you next time.